All right, so let's dive into lithium today. And more specifically, we're going to look at the investment potential of Lithium Ionic Corp. They trade on the TSXV under LTH and on the OTCQX under LTHCF. You sent over a bunch of financial reports and market analyses on them, so let's take a look and see what we can figure out about this company. I know what you're all thinking out there. Lithium, it's all about electric vehicles, right?
Well, EVs are definitely a big part of the lithium story, but lithium's applications go way beyond just cars. Think about the growing need for renewable energy storage. Like all those solar panels and wind turbines out there, they all need efficient ways to store the energy they generate, and that's where lithium-ion batteries come in. So we're really talking about lithium being a crucial element in making the shift to a more sustainable future.
Yeah, you're right. It's not just about electric cars at all. It's about powering pretty much our whole world in a cleaner way. And get this, U.S. lithium demand is projected to increase by something like 487% by 2030. That's a crazy jump, and it seems to me like it's a clear sign of how many potential opportunities there are in this market.
Yeah, absolutely. That demand surge is going to have a big impact across pretty much every industry. So looking into a company like Lithium Ionic Corp, newcomer in the lithium mining industry, is definitely worth doing. They're focused on the extraction and processing of lithium. And as with any new company, there are both advantages and disadvantages to consider.
I see. So maybe like high risk, high reward type of thing. But before we get into Lithium Ionic Corp specifically, can you give me a sense of the overall lithium market right now? It seems like everybody's talking about lithium these days. Is it really like a gold rush?
I mean, it's a hot market, that's for sure. Just last year in 2023, it was valued at $31.75 billion US dollars. And projections say that by 2030, it's going to reach a massive 74.81 billion, with a compound annual growth rate, or CAGR, of 17.7%. That kind of growth is going to get a lot of attention. And with that comes competition, of course.
Wow, 17.7%. That's some serious growth. So in this lithium arena, who are the big players that Lithium Ionic is up against?
Well, you've got some huge companies that have been around for a while, like Albemarle Corporation, SQM, SA Tianqi, Lithium Levent, and Allkem Limited. These companies have been around for a while and have some pretty significant resources.
Okay, so we've got this booming market with some major players already in it. So what about Lithium Ionic Corp makes them stand out? What should investors be paying attention to with them?
There are a few key things. So first, being a newer company could actually be a good thing. It lets them adopt some of those cutting-edge extraction technologies, and they can prioritize sustainable practices right from the start. They're not held back by older, less efficient methods. For example, they're using a direct lithium extraction method. It uses significantly less water than those traditional evaporation ponds, which are known for having a really big negative environmental footprint.
That's a great point. Sustainability is so important these days, and investors are really looking for companies that line up with their values. So Lithium Ionic's commitment to those environmentally sound practices could really be a strong selling point.
Exactly. And they're also well positioned to really benefit from that incredible U.S. demand surge we talked about, that 487% projected increase by 2030.
Right, being in the right place at the right time. You also mentioned something about industry consolidation earlier. Can you maybe explain what's happening there and how it could affect a company like Lithium Ionic?
Yeah, so there have been a lot of major acquisitions happening in the lithium space lately. You probably remember Rio Tinto buying Arcadium Lithium for a huge $6.7 billion. That's a clear sign that consolidation is happening. Larger companies are snapping up those smaller players to try and expand their own lithium resources.
Wow, $6.7 billion. That's crazy. So does that mean a smaller, more agile company like Lithium Ionic could be a potential acquisition target, do you think?
It's definitely possible. A bigger company looking to increase their lithium production might see Lithium Ionic's innovative approach and strong market position as a valuable asset.
So there's a chance that early investors in Lithium Ionic could see some big gains if the company gets acquired by one of those big companies.
It's certainly something to think about. But as always, investors need to be careful and make informed decisions.
Of course, informed decisions are key. So let's talk about Lithium Ionic's stock performance for a second. What have we been seeing there?
Well, as you might expect, in a market as crazy as lithium, their stock price has gone up and down a bit. But in February of this year, a Stifel Nicholas analyst gave them a buy rating and set a price target of $3.50.
That's a pretty big deal, right? Considering their shares were only trading at C97 the day before.
Yeah, it definitely suggests that people believe the company has the potential to grow. And last year, in June of 2024, they had what's called an oversubscribed private placement. That basically means investor demand for their shares was higher than the number of shares available, and they ended up raising $15.99 million to fund projects down in Brazil.
So there's definitely some investor confidence there. They wouldn't be oversubscribing if they weren't optimistic about the company's future.
Exactly. And they've also made the smart move of listing on the OTCQB market in the U.S. The OTCQB is a platform for those smaller emerging companies. It gives them more visibility and access to U.S. investors, which is especially important with the projected surge in U.S. lithium demand.
That makes a lot of sense. They're giving themselves access to a way bigger pool of potential investors. Okay, so we've covered the market Lithium Ionic's place in it and their stock performance, and even talked about the possibility of them being acquired. But let's get down to the important part, their financials. Can you walk us through Lithium Ionic's Q3 2024 report? And remember, everybody, these statements are unaudited, so we need to keep that in mind as we analyze them.
Yes, a very important point. So the good news is their net loss has gotten a lot smaller compared to the same period last year. Always a good sign. And their cash position has almost tripled since December 2023, partly due to that successful private placement we talked about earlier.
Okay, so it seems like their finances are looking up. Are there any other positive developments or strategic wins we should mention?
Oh yeah, for sure. They've received a non-binding letter of interest from the Export-Import Bank of the U.S. for potential debt financing of up to $266 million for their Bandeira project. That's a really big vote of confidence from a major financial institution.
That's huge. Sounds like they're getting attention from some big names. What else?
They've also announced their first mineral resource estimate for their Baisa Grande project. Basically, it's their first official estimate of how much lithium they think is in that project. And it came in at a promising 14.76 million tons. And there's potential for even more.
That's fantastic news. It sounds like they're moving forward well, but I have a feeling there's a but coming.
Well, it's important to keep in mind that Lithium Ionic is still operating at a loss. They're still relying a lot on external financing for all their exploration and development. And that always comes with some risk. And I want to emphasize that their financial statements actually say there's going concern uncertainty.
Going concern uncertainty. Can you explain what that means for our listeners who maybe aren't familiar with financial terms?
Sure. Basically, it means that auditors have some doubts about whether the company can keep operating in the long term, unless they make some big changes. It's a serious warning sign that investors should really look into carefully before investing any money.
That's a pretty big red flag. So it seems like we've got kind of a mixed bag here. Lithium Ionic's in a hot market with lots of potential, but they're still working towards making a profit and facing some financial uncertainties.
Exactly. It's a classic high-risk, high-reward situation. And while their Q3 2024 financials do show some positive signs, we need to remember it's just a snapshot in time.
So we're seeing some encouraging things, but also some potential issues. I guess the big question is, can Lithium Ionic deal with these challenges and actually become profitable over the long term?
That's the key question that any investor needs to think about. The potential of the lithium market is huge, and Lithium Ionic has positioned themselves well. But turning that potential into profit, that's the real test.
You mentioned earlier that they're relying heavily on external financing. Can you explain what that looks like in reality? Is it venture capital loans or something else?
It's actually a combination of different things. They've raised money through those private placements, like the one we talked about earlier. That potential debt financing from the Export-Import Bank would be a big help. But it's not a sure thing yet. And they'll probably need more rounds of funding to really scale up their operations and get to the point where they're producing commercially.
That makes sense. I mean, developing mines is expensive, especially with the kind of technology they're using. So what should investors be looking at in their financials to see if they can actually get the funding they need?
Well, besides the obvious things like revenue and expenses, it's important to look at their debt levels and how those are changing. High debt can be a big problem, especially for a company that's not making a profit yet. Investors should also look at their cash burn rate. How fast are they spending their cash reserves? A high burn rate, combined with limited access to new funding, could be a problem.
So basically, it's about understanding how long they can operate before needing a big cash injection.
Exactly. And that connects back to that going concern uncertainty we talked about. If auditors are worried about their ability to stay in business, then investors should be too.
Okay, so let's change gears for a minute. We've talked a lot about numbers, but what about the people behind those numbers? How much does the experience and track record of the management team matter when you're evaluating a company like Lithium Ionic?
The management team is super important, especially for a young company like this one. Investors should look for a team that has a proven track record in the mining industry, ideally with experience in taking projects from exploration all the way to production.
So not just geologists and engineers, but people who understand the business side of things as well.
Exactly. They need people who know how to handle things like permitting financing and ultimately getting that lithium out of the ground and into the market.
Okay, so we've got the overall market, the financials, and the management team. What about their strategic partnerships? You mentioned that potential financing from the Export-Import Bank. Are there any other collaborations or agreements that stand out to you?
Partnerships are really important in this industry. Look for agreements with companies involved in making batteries or electric vehicles. Those partnerships can give Lithium Ionic a guaranteed buyer for their lithium, which is really important in a volatile market.
So it's like they're setting up a customer base before they even start producing.
Exactly. It shows that there's demand for what they're doing.
Yeah.
And it reduces the risk of ending up with a bunch of lithium they can't sell.
This has been really helpful, but I imagine it can feel overwhelming for someone trying to take all this in and decide whether to invest. What advice would you give to our listener who's trying to figure all this out?
Well, the most important thing is don't get caught up in the hype. It's easy to get excited about a hot market like lithium, but you have to stay grounded and look at things critically when you're doing your research.
So don't just invest because everyone else is talking about it.
Right. Take your time and do your homework. Read industry reports, analyst opinions, and of course, go through the company's own filings carefully. Don't just look at the headlines. Try to really understand the company's fundamentals, their strengths and weaknesses, what opportunities they have, and what threats they're facing.
Okay, so research is key. What else?
Don't be afraid to ask questions. If something in a financial statement or company presentation doesn't make sense, reach out to the company directly or talk to a financial advisor. There's no such thing as a stupid question when it comes to investing your own money.
That's a good point. Investing can seem intimidating, but it's really about making informed decisions and taking control. What do you think is the most interesting thing about Lithium Ionic as a potential investment?
For me, it's their focus on sustainability and using the latest technology. The mining industry often gets criticized for its environmental impact, but they're trying to do things differently. That combined with their position in a high-growth market makes them a very interesting company to keep an eye on.
I agree. Doing things differently could give them a real advantage in the long run.
Exactly. Every investment is a bit of a gamble. But by carefully analyzing things and understanding the company and the market, you can improve your chances of success.
So as we wrap up our look at Lithium Ionic Corp, what's the final thought you want to leave our listener with? It seems like Lithium Ionic is kind of at a crossroads right now.
Yeah, they really are. All these strategic moves they're making, the potential for debt financing, expanding into the U.S. market, continuing to develop their projects. It makes you wonder, are they going for that long-term sustainable growth, or are they trying to make themselves attractive for a quick acquisition?
Yeah, it's like they're playing chess, you know, positioning themselves strategically.
Exactly. And that's what investors need to ask themselves. Am I betting on Lithium Ionic to become a big player in the long run? Or am I hoping for a quick return if they get bought out?
It's a really interesting question, and it shows how dynamic the lithium market is right now. So much potential, but still a lot of uncertainty.
Absolutely, and that's what makes it so interesting to watch. The decisions Lithium Ionic makes over the next few years will determine what happens to them.
So for everyone listening out there, as you learn more about Lithium Ionic Corp, keep that question in mind. Long game or quick acquisition, your answer to that question should guide your investment strategy.
And never forget, no investment is completely risk-free. Do your research, weigh the potential rewards against the risks, and make sure you're comfortable with the level of risk you're taking on.
That's great advice. We've given you a lot to think about today, but remember, this is just the beginning. Keep learning, keep exploring, and keep digging deeper into the world of lithium and the companies that are shaping its future.
Happy investing, everyone.
And happy learning.